Good afternoon and welcome to our annual member meeting for 2024. My name is Michael Cameron and I'm the chair of Equip Super. This includes Catholic Super, which operates as a division of Equip Super. Today, when we say the fund, we're referring to both brands combined. So to our Equip Super and Catholic Super members, a warm welcome. I also acknowledge and pay my respects to the traditional owners of the land from which I'm speaking today. Our presenters today include our CEO, Scott Cameron, our Chief Investment Officer, Andrew Howard, and our Chief Experience Officer, Carrie Norman. We also have other board members and executives in attendance today. Now, as we have a quorum of directors, as well as our auditor and our plan actuaries present, it's my pleasure to declare today's annual member meeting open. It's important to note that the information that we cover today and the presentations that you'll see are general in nature and relate to the fund as a whole. So the information doesn't take into account personal circumstances such as your individual investments or your financial objectives. So if you'd like to get some individual financial advice, we have financial planners who would be happy to assist. We've included a contact number at the end of this presentation for your reference, and you can also find the details available on our website. In our meeting today, I'll make some opening remarks on behalf of the board, and then that'll be followed by a presentation on behalf of the executive team by Scott, and Andrew will follow with a look at our investments for the year, and will provide some insights into the current outlook and what that may mean for the fund. We'll then hear from Carrie, who will share how we're supporting you through your working lives and into retirement, and in particular, she'll be talking about what we're doing to continually improve the services, products, and interactions that we have with you. Later in the meeting, we'll have time for some questions. We've already received several questions from our members, and we always like to see such a strong level of interest. It's just terrific. It's not too late, though, to ask a question if you'd like to. You can do so by during the meeting by using the Ask a Question function that's located at the bottom of your screen. If you're asking a question today, we can only take questions about the fund itself. So if you have specific questions about your personal account or your circumstances, please direct these to the helpline for our Equip Super members and the service centre for our Catholic Super members. We'll provide you with those numbers at the end of today's session. Also, if we don't get a chance to answer every live question submitted today, written responses will be provided to every question that's asked. These will be included in the meeting minutes, which will be available on our website in late December. Photos of the trustee board should now be on your screens. Over the year, we had 9 people on the board. Each board member brings a tremendous level of experience, skill, and commitment to the fund and to our values. The board has 3 employer representatives, 3 member representatives, and 3 independent directors. As mandated, the chair is a board-appointed independent director. This mix allows us the flexibility to attract and select high caliber people who, as a minimum, meet all of the required legislative standards. As many of you may be already aware or may have already noticed, today's meeting format is a little different for us. In previous years, we've held separate meetings for the Equip Super and the Catholic Super businesses. This year, for the first time, we're bringing together all of our members in a combined meeting. This reflects the broader journey we're on, a journey that combines 2 brands with 2 distinctive histories and brings them together as one fund with very clearly defined purpose to support our members as they prepare for financial freedom in retirement. This consolidation of the fund has already delivered benefits for our members, and Scott will talk more about that in a moment, about the benefits. Today, we're proud to serve nearly 140,000 members and manage nearly $35 billion in funds under management. I joined Equip Super as chair a little over a year ago, and I'm confident that as a mid-sized fund in Australia's superannuation landscape, we're well placed to meet the needs of our members, our employers, and of course our people. Being a mid-sized fund has some important advantages, namely, we're large enough to deliver the benefits of scale for our members, but we're also small enough to make meaningful connections with our members and our employers, which we do via many tailored services and support that we provide. While we're already operating at scale at our current size, strategically, we know that further growth will allow us to deliver additional scale benefits for our members without compromising on the personalised service we provide. This is very much where our current growth aspirations lie. In line with this strategic vision for growth, we were excited to announce in September our intent to explore a merger of equals with Telstra Super. Since then, we've undertaken due diligence, and I'm delighted to announce that this has confirmed that the merger is expected to be in the best financial interests of our members of the two funds. We've now signed a binding heads of agreement to proceed with the merger. The board is very pleased with this development, which will create a fund of $60 billion with more than 225,000 members. It builds on our proud inorganic growth history and delivers on a key aspect of our strategy. The key driver for the merger is delivering the best retirement outcomes possible to members through achieving scale benefits. The merger will provide significant economies of scale, and as a result, members will receive a reduction in the asset-based administration fee down to 15 basis points and a reduction in the admin fee cap to $750 from the effective date of the merger of the two funds. Telstra Super undertook a rigorous review of potential merger partners and ultimately selected us as their ideal merger partner. This is testimony to the fund that we've created. Telstra Super clearly identified our strengths across education and advice, retirement, corporate super arrangements, and importantly, realising the benefits for members through mergers. It's expected that the merger will be effective late next year. Until then, we'll continue to operate independently and with no disruption for members or employers. Rest assured, our focus is on delivering strong investment performance and competitive fees, and that won't change, nor will our commitment to providing education, advice, and a market-leading retirement offer. As a fund, we've long been recognised for the benefits we've delivered for our members every day. This year, we were awarded the highest platinum performance rating from Super Ratings for the 15th consecutive year, highlighting our dedication to value and excellence. Our super and retirement income products received a 5 Apples rating from Chant West, which is the highest rating Chant West award. We were also recognised by Super Ratings as the winner for Best Member Education in 2024. So I can congratulate the team on consistently achieving these excellent results. In closing, thank you for your support and commitment to the fund. Whether you're an Equip Super member or a Catholic Super member, you're very important to us. Together, we're building a resilient, member-centred fund that is well placed to meet our vision for tomorrow. We look forward to serving you, growing with you, and supporting you on your journey to and through retirement. I'm now going to hand over to our CEO, Scott Cameron, who will take you through the fund's achievements over the past financial year. So Scott, over to you. Thanks.
Thanks, Michael, and good afternoon, everyone. It's a pleasure to be back with you all again this year and to have this opportunity to share with you all what we've been doing to deliver on our key strategic objectives as a fund, and that's to grow, deliver, and connect. So growing our fund, delivering the right products and services for our members, and forging deep connections with our members and other stakeholders. And over the course of today's session, you'll hear about the activities and the initiatives we've undertaken to deliver on this strategy and what it means for you as a member as we support you to prepare for financial freedom in retirement. I'd like to start by briefly touching on the investment returns we're delivering this year. Our Chief Investment Officer, Andrew Howard, will also take you through our results in more detail shortly. For the year ended 30 June 2024, our MySuper investment option delivered a return of 9.25%, and our balanced growth accumulation investment option delivered 9.23%. These results are continuing to build on our track record of delivering strong long-term performance. For example, if we look at returns of these same options over the 10 years to 30 June 24, our MySuper has returned on average 7.18%, and the balanced growth option has returned on average 7.43% a year. In both cases, that's outperformance of average fund return for the same period, as measured by the Super Ratings Balanced Fund Crediting Rate Survey for June 24. A similar story for our retirement income members. The balanced growth option returned 9.88% for the year to 30 June 24, and it delivered an average return of 7.88% a year for the 10 years to 30 June 24. These results are very much a product of and a reflection of our overall investment philosophy, which is to focus on the long term and not be distracted by short-term fluctuations, all with a view to delivering consistent long-term returns for members across all market conditions. And we believe that that's the strength and consistency over a long term that will produce the sustainable and solid returns you need to grow your super and enjoy those savings throughout your retirement. It's always pleasing to be able to report on solid returns, but we're also very aware that when it comes to helping build wealth for retirement, we also need to consider fees. And as a profit to member fund, we continue to do everything we can to keep costs as low as we can for you, our members, simply because it means more of your money stays in your account where it can work towards your retirement. And for the second year in a row, we've reduced our administration fees. At a time when so many day-to-day costs are rising, we've been particularly pleased to be in a position where we can pass on these savings for our members. For our accumulation members, we've reduced the asset-based administration fee from 0.22% to 0.19% a year. This fee is applied to the first $500,000 of a member's account balance. And for our retirement income members, we reduced the weekly administration fee from $1.95 to $1. We also decreased the asset-based administration fee from 0.2% to 0.19% a year. And as with our accumulation members, this is applied to the first $500,000 of a member's account balance. As a result of these reductions, the maximum amount we can charge for the asset-based administration fees also decreased from $1,100 to $950 a year for accumulation accounts, and from $1,000 to $950 a year for a combination of retirement income and transition to retirement income accounts. These changes mean that the administration fees across our full product range are now fully aligned. So whether you're saving for retirement through an accumulation account or drawing on your retirement funds through one of our retirement income accounts, the same administration fees apply. And these fee reductions have in part been made possible by the work we've done over the past couple of years to consolidate and streamline the fund's operations. And that's been through our One Fund strategic initiative and the very extensive program of work that entailed. The One Fund program was designed to deliver a more streamlined operating model and a more consistent and cohesive experience for all of our members, whether Equip Super or Catholic Super, including one MySuper product, one investment choice menu, one set of fees, and one central administration database. It's largely thanks to our increased scale that those cost and efficiency improvements have enabled us to pass on these latest cost-saving benefits. And that's a strong indication that our strategy for growth is having a positive flow-on effect for our members, which is what it's designed to do. Growth in the size of our fund remains central to our strategic objectives. We believe it will allow us to achieve greater economies of scale, and that can directly contribute to the products, services, and experience we can deliver for you, our members. It will also help us to keep costs as low as possible for you. In recent years, the fund's undergone significant growth. It's doubled in size from $16 billion in funds under management in 2016 to more than $34 billion today. But it's also vital that we get the balance right. With nearly $35 billion in funds under management, we're already at a size where we believe we're big enough to add value for our members, but we're still also small enough to make genuine connections through the services and support we provide. And so our strategy for growth is designed to help us achieve the best of both worlds for our members, to increase the opportunities and value we provide, while also maintaining that personalised level of service and care that we're known for in the industry. It's a balance we remain committed to preserving because we believe it's in the best financial interests of you, our members. A key factor in our success as a fund to date, and something that will always be central to what we do, is the strength of our employer relationships. Equip Super has served employers since 1931 across a range of industries and sectors Australia-wide, including mining and resources, automotive and energy and utilities. Supporting these employers and managing large corporate plans, including complex defined benefit plans, continue to be important elements of what we do. Catholic Super, meanwhile, was established in 1971, originally to provide super and retirement services to teachers and other staff working in Catholic schools. Today, Catholic Super is predominantly focused on servicing Catholic workplaces in the education, welfare, healthcare and aged care sectors. Our Equip Super and Catholic Super employer relations teams are on the ground in workplaces across the country, working with more than 9,000 employers Australia-wide. These teams don't just support employers when it comes to managing their super obligations. They also add value to the workplace by providing services such as on-site seminars, general financial advice, and tools designed to make super simpler. Over the past year, the Net Promoter Score, which is a key market research indicator of how our employers rate the service they receive from us, from both Equip Super and Catholic Super, saw substantial increases. And I've personally met with a number of our key employers over the past year. Overall, our senior representatives across those employers have given us a 9 out of 10 satisfaction rating. And these results are a testament to the level of support we deliver for our employers, and also the value we bring to those workplaces and those employees. And that's fundamentally what these partnerships are about. How can we support our employers to better support our members? This year, we established a new member experience team, led by Chief Experience Officer, Carrie Norman. Carrie's team is focused on creating a seamless, helpful and responsive journey for you at every interaction. From enhanced retirement services through the new digital tools and an expanded financial advice offer, our goal as your super fund is to be there for you, providing support, expertise and resources every step of the way. Shortly, Carrie will take you through some of these initiatives in more detail. Each one's designed to provide you with better and more consistent experiences. I'd also like to acknowledge the work of our people. Everything I've spoken about today, the way we invest, the accumulation and retirement income accounts that we offer, and the services and support we provide for members and employers every day is only made possible by a very talented and dedicated team. Our people are the backbone of our fund. This year, we've invested in their growth and development with new learning and leadership training opportunities. We've strengthened our commitment to fostering a diverse and inclusive culture with our new diversity, equity and inclusion strategy. And we continue to offer a wide range of important employee benefits, including flexible work, professional development opportunities and competitive remuneration. Underpinned by this well-supported and highly valued team, we remain committed to our purpose of supporting you, our members, to prepare for financial freedom in retirement. And we thank you for your continued trust and support. I'd now like to hand over to Andrew Howard, who's our Chief Investment Officer, and Andrew will take a look at markets and fund performance. Thanks, Andrew.
Thanks, Scott. It's a privilege to be here today as we take you through the fund's performance and the investment strategy that underpins that performance. As many of you may already be aware, just from reading the quarterly investment reports on our website, as an investor, our core focus is on the long term and building your financial security over time with solid long-term returns. And I'm pleased to report that this year's results continue to build on the strong long-term performance of the fund. If we cast our minds back to early in the 2023-24 financial year, there were fears of a recession in the US, as well as ongoing inflation concerns here in Australia and around the world. And throughout, we had continuing conflict in Ukraine and the Middle East. Despite this, the fund delivered positive returns for our members for the year ended 30 June 2024. A strong rise in equity markets was a particularly positive contributor to returns. Our MySuper investment option posted a strong 9.25% for the year, and our balanced growth option returned 9.23% for the same period. Our higher growth options were the main beneficiaries of the strength in equity markets, with the Growth Plus accumulation option returning 12.12% for the financial year. Our retirement income members enjoyed similarly solid results. The balanced growth retirement option returned 9.88% for the year to 30 June 2024, while our higher growth options enjoyed double-digit returns. Our growth retirement option returned 11.78% for the period, and Growth Plus retirement returned 12.83%. Our investment strategy, with its core focus on the long term, plays a fundamental role in delivering solid, long-term returns for our members. Our core objective as the manager of your super and retirement savings is to grow your wealth over time, so you're better equipped for financial freedom throughout retirement. We take an active approach to managing investments, which means we make proactive investment choices based on market conditions. At the same time, we emphasise patience and discipline. And while financial markets naturally present opportunities and risks that we manage over shorter timeframes, our main focus will always be on delivering strong returns over the longer term. We fundamentally believe that as long-term investors, we can afford to be patient when it comes to riding out the day-to-day ups and downs in investment markets. It's an approach that's designed to help us navigate all market conditions, protecting members' savings during downturns and maximising returns when markets rise. Diversification is also at the forefront of our investment strategy, not just across asset classes, but also within them. We believe diversification is the most important tool we have to combat the impacts of shorter-term volatility in investment markets, as it allows us to take advantage of those investment opportunities in different asset classes as and when they arise. Another important element of our overall investment strategy is responsible investing. It's a fundamental aspect of our fiduciary obligation to deliver the best financial outcomes possible for our members. What does this mean? This year, we have again seen cases where issues like labour practices, workplace safety standards, carbon emissions, and data security can each influence a company's performance and impact the risk-adjusted returns we can deliver for our members over the long term. We seek to ensure companies are doing the right thing for their people, the planet, and our communities, and take their actions into account when making investment decisions. Our approach to responsible investment covers 4 key areas: ESG integration, active ownership, ESG filters, and advocacy. By working with our investment managers, we consider how a company is approaching issues like environmental regulation, labour laws, and disclosure obligations, and seek to assess how effective companies are in those areas or encourage companies to take effective actions to address risks and maximise opportunities that are identified. This might be in relation to near-term issues like encouraging companies to take actions to prevent deforestation in the Amazon, or to longer-term issues like how companies are considering the impact of climate change on their long-term business model. As we invest a small amount in a large number of companies in lots of countries and almost every industry, we prefer to actively engage with companies on ESG issues rather than mandate that certain activities or companies can't be held in our portfolio. Instead, If we remain invested in companies, as investors, in many cases we can encourage change and support company management to transition to more sustainable and climate-resilient operating models. You can read more about our activities in relation to engagement and company voting in our annual report on our website, or visit the Responsible Investment section of our website, where you'll also find our proxy voting records. Climate change remains a key area of focus in our responsible investment activities. The potential impacts of climate change are wide-ranging in their nature. We continue to recognise the importance of managing climate-related implications in our investment process. Again, because we believe this aligns with the best financial interests of our members. Our 2022-2025 Climate Change Plan outlines our key areas of focus. We're seeking to align our portfolio with the global reduction in carbon emissions, reaching net zero by 2050. We remain strong advocates for communities impacted by the transition away from carbon-intensive energy and industry. We actively seek investment opportunities in technologies and assets that will contribute to or benefit from the transition to net zero by 2050. And we'll continue to incorporate the analysis of climate scenarios into our stress testing and asset allocation decisions to ensure we can respond to emerging climate risk and opportunities. A summary of the plan is available on our website if you're interested in taking a look. So with that summary of how we invest as a backdrop, let's take a brief look now at some examples of what we're investing in. One of the longer-term assets in our portfolio is a $160 million investment in the Barwon Institutional Healthcare Property Fund, which invests nationally in healthcare real estate. Australia's growing and ageing population continues to drive strong demand for healthcare services. This is a property fund with more than 50 primary and secondary care facilities nationally. So that includes facilities such as hospitals and private medical facilities, and these are tenanted by some of Australia's largest private medical providers, as well as state government tenants. The nature of the healthcare industry means that properties supporting this sector are often specialised and contracted to long-term tenants, which are less sensitive to the economic cycle. And so this investment is able to generate a stable yield and commercial rate of return, while at the same time facilitating the healthcare needs of the community. And this year, we made a new investment in Aligned Energy. This is another interesting example of the types of investments and sectors where we see the potential for sustained long-term benefit. Aligned is a developer and operator of multi-tenant wholesale data centres across the United States, and we've committed to invest $80 million. In the US, they currently manage 11 operational data centres with an additional 9 facilities under construction and 6 land parcels for future development. And in 2023, they completed the acquisition of ODATA, one of the largest hyperscale data centre platforms in Latin America, with a presence in Brazil, Chile, Colombia, Mexico, and Peru. The digital infrastructure sector is experiencing strong growth due to the rising demand for faster, more reliable connectivity, as well as the exponential increase in data consumption, cloud computing, and storage needs. Aligned has also set clear sustainability goals across key areas, and they've matched 100% of their annual electricity consumption for base building services with zero carbon renewable energy certificates. Looking ahead to global markets and how the fund is currently positioned, the US economy continues to power ahead. The labour market remains strong and corporate earnings are robust. Inflation, while still a little too high, is moderating. Markets are expecting the US Federal Reserve to continue with interest rate cuts, with another 3 cuts forecast by the end of 2025. Although with the US economy demonstrating such resilience, a rate cutting cycle of that extent would be unusual. So there's still some potential for repricing in market expectations, and that has the potential to create volatility within equity and bond markets at some point in the future. Recently, we've been enjoying an exuberant market environment, with equity markets continuing to reach new record highs. So the question we continue to ask ourselves is, what will bring this extraordinary bull market to its end? It's only been a month since Trump's victory in the 2024 US presidential election. On a positive note, The election outcome itself was clear and uncontested, which provides certainty. Also, Trump's policy agenda is positive for earnings and growth, which will also benefit markets over the medium term. However, the approach to trade policy and tariffs and international negotiations like the climate agreement will be watched carefully for any flow-through impact to inflation, and deficits will likely remain high. There's also a lingering question over whether the stimulus measures introduced in China will be enough to kickstart growth, and whether further measures will be forthcoming. Meanwhile, geopolitical tensions throughout the Middle East and Asia continue to dominate our news cycles. For all of these reasons, we remain strategically cautious. Our strategy is certainly benefiting from the continued strength of equity markets, but we're committed to ensuring the portfolio remains well diversified to contend with both rising and falling markets. As such, we're not tempted to chase short-term returns while markets are experiencing these record highs. Consistent with that strategy, the fund remains well positioned to navigate what lies ahead and to continue to deliver strong long-term investment returns for our members. If you have any questions about your investment options and whether the choices you've made are suitable for you, you can talk to one of our service consultants via our usual contact numbers. We also have a team of financial planners who can assist you. Those contact details will be shown on screen at the end of today's meeting. I'd like to now hand over to our Chief Experience Officer, Carrie Norman.
Thanks, Andrew, and good afternoon, everyone. I'm reasonably new to the fund, having joined in June this year, but I've already seen a lot of great work in terms of what we offer our Equip Super and Catholic Super members. I'm also very motivated by the opportunities we have to further enhance the experiences and outcomes that we can provide for you. Creating positive and helpful experiences for our members is fundamental to the core purpose of supporting you to prepare for financial freedom in retirement. And as the Chief Experience Officer of the newly formed Member Experience team, my team and I are solely dedicated to ensuring that the interactions that you have with the fund are as helpful and as efficient as possible and focus on your needs. So whether you're exploring the articles on our website, talking on the phone with one of our service consultants, planning for the future with our advice team, or expanding your knowledge with an online seminar, we're here to ensure that you receive the education, advice, and support you need when you need it. And we're continually looking for opportunities to enhance what we offer for members, regardless of where you might be on your unique journey to and through retirement. Over the past year, we've introduced a number of exciting initiatives in the retirement space. Retirement is one of the most significant transitions in our lives, and as more of our members move into that phase, we want those members to know they're not alone and that we're here every step of the way helping to foster and grow retirement literacy and retirement confidence. Based on a deep understanding of the needs of our member base, as well as detailed research into the needs and expectations of Australia's retirees, we launched a range of new retirement-orientated tools and services and support on 1 June 2024. Our enhanced retirement offer aims to strengthen a member's connection with their super and retirement planning, particularly through the provision of one-to-one guidance and assistance. We established our dedicated retirement support team, serviced by a team of retirement experts. So if you're thinking about retirement, you can call the team and ask questions, learn more about the options available to you, and receive general advice and one-to-one assistance with taking your next steps. This service is available over the phone or via video call, and members are able to call and speak to somebody immediately or book ahead of time. Appointments can be booked by calling the team or via the online booking form that's available on our website. We've also focused on raising awareness of retirement planning through our Don't Be Shy campaign, where you're encouraged to call our retirement specialists and ask your big questions about retirement at no extra cost and with no obligation. Throughout the year, we've also undertaken a range of initiatives designed to help you more confidently navigate that all-important transition to retirement and your retirement years. We published our comprehensive retirement handbook, which is available for non-members as well as existing members. It's filled with practical steps and tips and support to help make sense of the options available and to answer some of those big retirement questions. We added to our existing suite of interactive online calculators with the new retirement drawdown calculator to help you determine how long your savings may last through retirement and how you might be able to combine those savings with the age pension if you're eligible. We implemented a simple online process for opening new retirement income accounts with us, and we enhanced the communications we send to you at key points in the retirement journey to help ensure you're getting the relevant information and helpful contacts at the right time. And we undertook an overall uplift of our retirement-based website content, including information on the age pension and ways to retire well. At the same time, we've been making improvements to our advice offer. We know that delivering the right support and advice at the right time can be pivotal in helping you plan ahead with confidence and ultimately achieve better outcomes for your retirement. Our advice offer is structured to meet a wide range of different member needs. And through our super advice service, we can respond to questions from members about their accounts, their contributions, or their investments with us. This type of advice is usually provided at no extra cost to the member. For many of our members, advice is an important element of planning for retirement, and we're committed to making advice as accessible as possible for our members. So we recently expanded this super advice menu to include advice on retirement income streams and setting up a retirement income account with the fund. As with most of our super advice, this is usually provided at no extra cost to the member. And through our comprehensive advice service, our financial planners can provide more complex personal financial advice, both to members and non-members alike. This can be particularly helpful when seeking advice as a couple. Costs usually apply to this service and are discussed prior to proceeding with advice. Our team is dedicated to providing the best possible service to our members, and this is reflected in the overall member satisfaction rating for our advice team this year, which was 9.1 out of 10, with members highlighting the ease of dealing with us, our expertise, the way we simplify the complex, and how we tailor our solutions to each member's situation. This is a really great indicator of how much the work we're doing in this space is valued by those of you who are using this important service. One of the main ways our members choose to engage with us and their super and retirement savings is via the fund's websites. Further to significant redevelopment work in the previous financial year, we launched a fully updated Equip Super and Catholic Super websites on 1 July 2023. This launch included new content, personalised tools and information based on the member's stage in life, a range of educational resources, as well as improved performance and interactivity. And over the past year, we've continued to build on and improve that digital experience for our members. We launched our transition to retirement calculator, our new retirement drawdown calculator. They join our existing suite of calculators and give you the opportunity to run some numbers and tweak the parameters as you plan and set goals for your savings and retirement journey. We've made it easier than ever to open a retirement account with us with the launch of our online join portal. The portal creates a more streamlined online experience if you're transitioning from your existing Equip Super or Catholic Super accumulation account into one of our retirement income accounts. And it even provides information and guidance along the way if you're still deciding which type of retirement account you would like to begin. We've also added a series of pre-recorded webinars to our website, so you can pick and choose which topic you'd like to learn more about, and then watch the webinar at a time that works for you. Topics include super basics, women and super, retirement planning, and the value of advice. One aspect of our overall offering for members centres on an area that can be easy to overlook until you need it most, and that's insurance. We strongly believe in helping you to protect your assets and your future lifestyle through insurance. And we know it's just as important to many of you too. As at 30 June 2024, around 50% of our members had default cover through their Equip Super or Catholic Super accounts. We know that insurance can be complex, so it's important that you have a good understanding of your cover and whether it's meeting your insurance needs. To help address this need, we introduced a new personalised insurance summary for all of our members with cover through the fund. This summary provides practical, easy to understand information about your cover, helping you to better understand what cover you have, how it works, and how to make changes if you need to, and the different options available to you. This year, we also redesigned the way the fund charges for insurance cover. We introduced an insurance fee calculated at 4% of premiums to reflect the costs that we incur as a fund in providing insurance to our members. This fee came into effect at the beginning of the financial year on 1 July 2024. Importantly, the insurance fee doesn't apply if you don't have insurance cover through the fund. It's only paid by those that have insurance cover through the fund, and it's designed to ensure we achieve a simple and more equitable, user-friendly, user-pays approach to the cover we provide. On a final note, I wanted to extend my thanks to those of you who have provided feedback on the experience you've had with us throughout the year. We genuinely welcome that feedback. Not only does it help us understand when we're getting things right, even more importantly, it can highlight where we need to improve and how we can better support you. Please keep in mind you can reach out to us at any time. If there's anything that we're doing well or something that you think that we can improve on, please don't hesitate to let us know. We'll provide our contact details at the end of today's session, but you can also get in touch via the website at any time. I'll now hand you back to Michael Cameron to take us through the final agenda items.
Thanks, Carrie. Well, that includes our presentations, and I should say thank you to each of the presenters and also the team behind the process. We're now up to our last agenda item, which is the Q&A session. We've got plenty of time, and I'd also like to thank all of our members who have taken the time to submit a question. So our first question is from Equip Super member Mohammed, who's interested in how members might benefit from the merger with Telstra Super. His question is, how will the merger with Telstra Super improve member outcomes? What kinds of benefits will members be able to get following this? So, Scott, this is probably one for you, and there's clearly a lot of interest in the members on this issue.
Thanks, Michael, and also just apologies. I understand that maybe in my presentation, the first half of it, you mightn't have been able to see me, but hopefully that was rectified and is rectified now. So apologies on that. And certainly you're right, Michael. There's a lot of interest and for very good reason. The merged entity would leverage our combined strengths across both member and employer servicing, retirement solutions, investments, and managing tailored corporate superannuation arrangements, including defined benefits. It's expected that that merger will provide significant scale benefits and deliver improved retirement income outcomes to our members, whilst maintaining that personalised service that the two funds currently provide. And as announced today, members will receive a reduction in the asset-based administration fee to 0.15% and a reduction in the administrative fee to $750 per annum from the effective date of the merger, and that's expected to be later in 2025. So back to you, Michael.
Great, thanks, Scott. I'm just looking at the next question that's come through. It's also on the subject of the merger with Telstra Super, and it's from Shudamar, who's an Equip Super member. And they've asked, how is this going to impact members, and will there be an opportunity to allow members to invest a proportion of their super in direct access? So I guess that's Australian shares and ETFs and things. So probably yours, Scott, again.
Okay, Michael, happy to take that, and thanks, Chudama, for the question. Whilst there's no immediate changes to the products and services that you'll receive, in time we will look at the two funds' investment menus, and they'll be combined, and we'll be looking to take a best of breed approach to that, creating a broader range of options for members to manage their superannuation and retirement savings. And it's just that Telstra Super does currently provide its members with direct access option, and that does offer their members the ability to invest their super directly in companies listed in the ASX 300, a range of exchange traded funds, ETFs, and also term deposits. But thanks for the question, and back to you, Michael.
Great, thanks, Scott. Moving on to the next question, that's from Richard, an Equip Super member. And they've asked, how has the Israeli conflict affected global investment decisions? And I guess the question extends then to the Trump presidency. What's that going to mean for global markets? So, Andrew, this sounds like right up your alley. So, some thoughts on this one?
Yeah, sure, Michael. Look, firstly, the ongoing conflict in the Middle East is devastating for those involved, and we hope that a resolution is soon reached. In terms of markets, the impact so far has been limited, with oil markets showing the highest sensitivity. Unfortunately, conflict in the Middle East is not new, which means financial markets tend to look through shorter-term implications. However, the situation warrants close watching, and further escalations would see volatility rise. Meanwhile, we're only a month into Trump's victory in the 2024 US presidential elections. As I said earlier, on a positive note, the election outcome itself was clear and uncontested, and certainly markets like certainty, so that's certainly been provided. Also, Trump's policy agenda is positive, as I said, for earnings and growth, which will also benefit markets over the medium term. However, I think the thing that we're all watching for here is just Trump's approach to trade policy and tariffs. So we'll be watching carefully for any flow-through impact to inflation and retaliatory measures from global trade partners. Deficits will likely remain high too. So the key flow-through here is to interest rate policy and bond yields. And Michael, that's something that we'll be watching extremely closely as we move forward from here. So back to you.
Yeah, absolutely. The next one's on the same theme, so probably another one for you, Andrew. It's from Judith, who's a Catholic Super member. And Judith is asking, how prepared is Catholic Super to deal with the increasing volatility of the global political environment and the impacts on the stability of the fund to withstand a financial crisis? So maybe just a few more comments on similar topics.
Yeah, sure. Thanks, Michael, and thanks, Judith, for a question. I think it's one that's no doubt fairly top of mind for many of our members, and certainly for us as an investment team as well, and something that we're always thinking very much about. I think the key thing here is that we need to remember that volatility is part and parcel of investing in global markets. So in order to make a financial return for our members, we must take on an acceptable level of investment risk. Our key avenue for managing risk is via diversification. So this means we invest in a wide variety of assets that behave differently in certain economic scenarios. This helps to smooth the ride over the shorter term episodes of volatility without compromising returns over the longer term. Also, it's important to remember that super is a long-term investment. So it's inevitable that sometimes there will be periods where investment returns are low or even negative. However, history has shown that markets eventually recover, and these periods can provide excellent investment opportunities. Specifically, in terms of the geopolitics that Judith is mentioning here, we agree that we are in a period of heightened risk, which bears close watching. However, again, our key principles of diversification and long-term investing are the best guide to managing through any volatility that we see in markets. But it's something, Judith, and that's always very front of mind for us in terms of how we're managing the strategy and how we're positioning the portfolio. Michael, back to you.
Yeah, thanks, Andrew. I'm going to stay on the investments theme, only because we've had a couple of queries just about cryptocurrency, which is probably no surprise, given it's in the news, and its role in the portfolio of INI. So we've got a question from Michael, who's an Equip Super member. He says, is Equip Super investing in digital assets like Bitcoin directly, or do we plan to? And given IBIT quickly amassed over $30 billion in assets, setting records for the fastest ETF to reach such a milestone, does this form part of our strategy for our members? So, Andrew, some comments, please.
Thanks, Michael, and thank you for the question. It's one that we do actually get quite often, and of course, it's worth just noting here as well that since Trump's election win, we certainly have seen a pretty extraordinary rise in Bitcoin. But look, at this stage, the fund doesn't allocate any member funds to Bitcoin or any other digital asset for that matter. I think one of the things here is that we do feel that it's actually quite a speculative asset. It provides no cash flow to investors, and it's difficult to ascribe a fundamental value to it. We do acknowledge, though, that the regulatory environment for Bitcoin continues to evolve, and the ways for investors to gain exposure have certainly expanded recently. However, I think for the time being, we don't view it as an appropriate investment for our members' retirement savings. Michael?
Great. Andrew, the next one is from Mark, who's a Catholic Super member. His question is, what is the investment governance framework that is applied to ensure that our exposure to unlisted investments, and he's given some examples, real estate, infrastructure, private debt, etc., is minimalised to ensure that it doesn't impact investment performance? So I'm sure you can make a couple of comments on that.
Yeah, absolutely. And it's a good question. And look, as many of our members may already know, as per superannuation industry standards, the fund is required to have an investment governance framework consistent with its obligations to act in the best financial interests of beneficiaries or our members. As part of this, we must formulate a liquidity management plan and develop, maintain, and implement a comprehensive investment stress testing program. Our liquidity management policy is approved by the trustee. It outlines procedures for measuring and managing fund liquidity and considers how liquidity can be managed in a range of stress scenarios. We measure and report our liquidity exposure regularly. We constantly monitor market developments to observe how conditions may be evolving, which could impact the liquidity environment of certain assets and the fund specifically. And I think, when we talk about geopolitical risk, that's one of the things that, we're building into just thinking about our liquidity management plan. Fund investments are rebalanced daily. As part of this, we monitor member cash flows and switching activity, which ensures we have ample liquidity to meet all obligations. Liquidity management is a key area of focus for the regulator, APRA, and for the fund. We are keenly aware of our liquidity positioning, the market environment for illiquid assets, and our requirement to meet member obligations as they fall due. So Michael, certainly something very front of mind for us as we manage members' retirement savings.
That's great. Thanks, Andrew. Now, moving on to a question from Michael, who's a Catholic Super member, and this is about the really important issue of account security. His question goes, a number of banks and even industry funds now improve the security of their members' funds by sending an authorization code to the member's mobile phone before the funds can be accessed. Is Catholic Super considering such a move? So, Andrew, we might give you a rest for a few minutes, and Carrie, this might be one for you, I think.
Thanks, Michael. It's a really good question. Ensuring our members can transact with us and manage their accounts securely really is a top priority for us, as it is for our members. So we're always looking at ways that we can improve the security of our members' accounts and their personal information. I'm pleased to say that we've been looking at improving our security protocols for Catholic Super members over the past few months. Equip Super members will already be aware that an additional authorisation code is requested when they log onto their Equip Super platform. And within the next few weeks, we should be introducing that same safeguard to Catholic Super online platform. So for any Catholic Super members logging in to access their accounts online, you should soon see this additional security requirement. And this will mean some small changes to the way Catholic Super members log in, but we think it's well worth it if it means improving security. We've contacted our Catholic Super members to let them know what they need to do for future logins. And if you haven't logged in previously, the Member Online portal will step you through that process. We're very well aware that potential security threats to data and personal information are always evolving. So it's essential that we continue to evolve the systems and standards we use to keep your accounts and information secure. I'd also urge members to really stay vigilant too. Be vigilant around unsolicited emails, whether they're from us or another organisation you know. And keep an eye on your accounts for any suspicious activity, things like transactions or apparent fees that you weren't expecting or can't explain. And don't hesitate to take that extra precaution of calling us directly if you want to verify a transaction or double check that an email you've received has definitely come from us. Also be aware that we'll never ask you to give us your bank details through an email or an SMSF, nor will we send you any correspondence that asks you to give us the login credentials that you use to sign into your secure account through our member portal. Like I said, these threats are constantly evolving, so we all need to remain vigilant when it comes to keeping your personal information and data as secure as possible.
Yeah,
Thanks,
that's
Michael.
good. Good question. Good answer.
Mm.
We're starting to run out of time, so maybe just get a couple more in. We've got one from Ryan, who's an Equip Super member, and this is regarding insurance cost. Ryan said, "How come blue-collar workers are being charged more than white collar workers for insurance?" So maybe Carrie, can you answer that?
Yeah, absolutely, Michael. I can answer that for Ryan. When you join Equip Super, Ryan, we assign you an occupation rating based on who you work for. This rating is one of the factors that determines the premiums that you pay for any insurance cover that you take out through the fund. So for Equip Super, we have 5 occupation ratings: professional, white collar, standard, blue collar, and heavy blue collar or hazardous. Occupations rated as blue collar or heavy blue collar or hazardous usually involve manual labour, and so our insurer considers them to be riskier than, say, a white collar or professional rating. And because they come at a higher risk of a claim, the cost of cover itself is usually higher. You can check the occupation rating that applies to your insurance cover at any time by logging into your account online. And if your work situation changes, make sure you let us know. It could even mean a drop in your occupation rating, which would then lower your premiums. For Catholic Super members, please note that this is one area where our 2 brands do differ. So you'll need to refer to the Catholic Super website or your product disclosure statement to find out more about the arrangements that may apply to you. So hopefully that answers your question, Ryan.
That's great. Unfortunately, I was going to try and get another one in, but I think that's all we've got time for to cover in today's forum. All of the questions that we've received, including the ones that we didn't get to answer today, will be addressed and made available on the fund's websites in January. I'd like to now just briefly take the opportunity to reiterate that as your super fund, our purpose is to support you as you prepare for financial freedom in retirement. And that means delivering strong long-term returns while also keeping our fees as low as possible. And it means providing you with the personalised service, the support, the guidance and advice that you need to achieve the best possible retirement outcomes, which are really important. So on behalf of the board and the management team, I again thank you for your time today. We look forward to continuing to support you on your super and your retirement journey. And of course, as I said earlier, if you have any questions about today's meeting or about your super and your retirement, please get in touch via the usual channels, which you'll see displayed shortly. So that concludes our 2024 annual member meeting, and thank you again for joining us, and have a great day.